Hey everybody! Yes, it is Buffy the Rate Slayer here, and we are back with a third episode of the March 2022 Weekly Market Insight Series directly from the Capital Markets Trading Desk right here at Sunwest Mortgage Company. Markets rebound nicely despite continued upward yield pressure. The FOMC's two-day policy meeting concludes Wednesday with Chair Powell's promising press conference. The Federal Reserve finally raised interest rates by a quarter percentage point, the first increase since 2018, after 2 years of holding borrowing costs near zero to insulate the economy from the pandemic. The meeting also signaled hikes at all 6 remaining meetings this year. The next scheduled FOMC meeting will be held on May 3rd and the 4th. The global economy, however, is still struggling with war in Ukraine and the stagflation risks, bracing up for yet another disruption as China scrambles to contain its worst outbreak of COVID-19 and place 17.5 million Shenzhen residents into lockdown for about a week. So, what else is driving the market? Well, oil is still trading at more than $100 a barrel amid a bumper run of volatility. Treasuries continue to be under pressure. Russian President Putin said Ukraine's leadership was not being serious about resolving the conflict. President Joe Biden will visit Europe next week in a show of commitment to NATO as the war intensifies. The U.S. also signed a spending bill carrying billions towards weapons for Ukraine fighters. Supply chain bottlenecks were easing ahead of Russia's invasion of Ukraine, but inflationary concerns are set to reassert themselves amid turmoil in oil, food, and commodities prices. PPI increased 0.8% in February following a 1.2% surge the prior month. Weakness in the Empire Manufacturing Survey extended beyond the headline in March, slipping 14.9 points to 11.8. Orders and shipments both fell, providing a deeper contraction in manufacturing activity in the state economy. Household net worth, the total value of assets minus the total value of outstanding liabilities for individuals rose $5.3 trillion in the final quarter of 2021 as home prices and equities continue to climb. Sarah Bloom Raskin withdrew as President Joe Biden's nominee to be Federal Reserve's Vice Chair of Supervision after it became evident she didn't have the votes to be confirmed. Under a bipartisan proposal, Americans would no longer need to change their clocks twice a year. Senator Rubio's legislation is planning to make daylight saving time permanent across the country. The law, if approved, will be implemented till November 2023. This year, the saving time began on March 13th and will last until November 6th. The federal government warned Congress that the country could eventually run short of vaccines because of a lack of funding. The White House made renewed calls to authorize a fresh round of funding for the government's coronavirus response. As per the recent reports, U.S. rent inflation reached yet another record in January, fueled by red-hot markets. Single-family rental prices jumped 12.6% from a year earlier. New U.S. home construction increased 6.8% to a 1.77 million annualized rate in February, to the strongest pace since 2006, suggesting builders had greater success navigating material and labor constraints in the month. MBA mortgage applications index fell 1.2% in the last week after rising 8.5% in the prior week. Purchases were up 0.7%, while refinances fell 2.8%. Growth in U.S. retail sales slowed in February after surging a month earlier, suggesting that consumers tempered their spending. The value of overall retail purchases increased 0.3% after an upwardly revised 4.9% gain in January. So let's wrap it up. All right, Russia's isolation from global economic links has disrupted commodity markets, sparked fears of further slowdown in global growth, and a surge in inflation already boosted by COVID-related supply hiccups. While Wednesday's meeting stated the Fed's whatever it takes policy for cooling down inflation in the coming months, I'm just nervous if this hawkishness could trip the the economy into a recession. Following months would clarify the picture better. So that's it for the week, everyone. As always, please join us again for the figures of new home sales, EIA crude oil inventories, MBA mortgage applications index, jobless claims, current account balance, durable goods orders, updated status on war, and much more. Stay tuned for our news, and our trading desk will keep you informed with pricing incentives. Happy Friday, everyone, and have a great weekend. Buffy out.